Hello, Maverick traders. Welcome out to your market roundup for November 29th, 2022. Corey here with you, and let's get to it. So, as we go into this week, there's actually quite a few events coming up. Powell speaking tomorrow. Expectations are that he's going to continue with his hawkish message. I would expect the markets to kind of expect that. We've got an inflation number, PCE on Thursday, and then payrolls on Friday, so plenty to keep us busy throughout the rest of this week. Today was kind of a pause day. The NASDAQ led lower. Everything else basically flat. Oil was up 1.5%, gold up 0.5%, but I would call today pretty much a quiet day overall. A little bit more selling in the NASDAQ, a little bit more buying in the commodities, but overall kind of sideways. Advancers versus decliners, even though the markets were down, isn't it interesting that 54% of stocks were up today? And this is kind of speaks to the majority of stocks continue to advance. The large cap tech continue to decline. Apple and Amazon had a rough day today, but the majority of stocks actually did pretty well. We're now almost 70% above the 50-day moving average. On the daily news, China COVID protests continue. That has been something that has fueled a little bit of selling yesterday, certainly in the equity markets. But what was interesting about yesterday is even though there was this news coming out and every major station, CBS, NBC, ABC, Fox, they all had this COVID protest, on the front page. And yet Chinese equities were up about 1% yesterday. And that's noteworthy in that something that we try to emphasize, which is bad price action on good news or good price action on bad news. And it was that. It was good price action on really bad news. And it also told you a little bit more to the story. You've got to be careful about your emotions and about how you feel about situations and separate that from your trading and investing, because a lot of times when you should be buying is when it feels really, really bad in the market. So when you should be selling is when it feels really, really good. So don't get caught up in your emotions that way. Trust your eyes, trust more of what you're seeing and setups and opportunities, and learn to kind of understand that a lot of this stuff gets priced in. And sure enough, fast forward to today, and Chinese equities were up 5% today. U.S. consumer confidence beat expectations slightly. We've seen oil prices back up, and it's been interesting how consumer confidence numbers have been directly linked to oil, meaning as oil prices have come down, consumer confidence goes up and vice versa. So given that we've been seeing oil prices coming down in the past weeks and months, not a surprise that consumer confidence ticked up a bit. Now look at this S&P 500 chart. We're in a downtrend on the longer term scale. If you were to put a 200-day moving average on here, if you were to look at a downtrend line, I don't know if I can draw it perfectly, but it would kind of come in here where the downtrend line probably corresponds to about 410, probably by the time the market gets there and that downtrend line is downward sloping, maybe just below 410. But we're kind of big picture in this bear market, okay? We're in a bear market below the 200-day, below the 50-week moving average, below this long-term downtrend line. But in the short term, we're in an uptrend, aren't we? 20s above the 50, and we continue to slope upward. I suspect, I've come I actually got a little negative on the market last time we met, which was a couple of weeks ago up in here somewhere. I shorted the market. I played QQQ to the downside. I actually just took that trade off. Didn't have a ton of profit or anything in it because we haven't come down that much, but basically kind of a sideways picture here the past couple of weeks. And that's a really good sign for another leg to the upside, because essentially we've had a lot of buying pressure to get us up here, and now we're consolidating after those gains. What I envision is a push up and just pierce that trend line, just poke its head up above it, which is kind of how support and resistance works. A lot of times you squish into it. It's like this big cushion and you go up and squish in. And that's where a lot of people feel like it's breaking and they panic. And short sellers have their stop losses there that trigger and so on and so forth. It's the final buyers. You squish in and even through, it's kind of this little false move. And then you come fast the other way. So my expectation here, and I've been pretty bullish on this rally, and I have to get bullish again. I think we're going to see another push to the upside. We're going to poke our head just above that trend line for a day or so, and then likely come reversing back down. QQQ, a little bit of an underperformer, but still kind of consolidating for the past couple of weeks. Just a little like mini ABC type of pattern, 1, 2, 3. I still suspect this should work its way higher. I'm not going to be surprised if it lags, though. If the Apples and the Amazons of the world continue to underperform, even though if the market gets a nice little rally here in the short term, they should go up a little bit. I wouldn't expect them to lead the upside move. So you're seeing a lot of this. Apple and Amazon and the large cap tech continue to underperform. That's been an ongoing theme. Energy is actually the one sector that's had the best year, but it's the one sector that's had the worst last couple of weeks. Large cap tech has been worse, but energy has really lagged. If you were to compare an energy chart to industrials or financials or a lot of these different sectors for the past couple of weeks, energy's done nothing really. And what that's done is kind of created a base. So I think I have to get a little bit more constructive on the potential that energy can bounce back here. I've kind of not been focused on that group. Something like Conoco, I was looking at its chart. I debated putting it in because it has broken out. It's gone down the past couple of weeks like energy stocks have, but now it's back to the old breakout zone, the prior resistance, new support type of idea. But energy looks like it might, this might be where it makes one more charge into the end of the year. And if there's one theme that tends to happen into the end of the year, it's that the leaders lead and the laggers lag. And the reason for that in many cases is taxation. Energy stocks are the one group that's up a lot. So investors don't want to sell their energy stocks because they'd have to pay taxes on that. If they sell them next year in January, they delay that tax bill a whole extra year. So there's good reason for energy now that we're kind of going into December. There may be a lack of selling in the energy markets essentially, and maybe a little upside, maybe a little chase in energy in the end of the year. A lot of institutions will also want a window dress and show that they've owned energy. So I'm becoming constructive on energy for the first time in a few weeks, and I think I'm going to buy a couple of those as well to play this upside move. So looking at the charts, again, we're above the 20, above the 50. The slope has started to turn bullish. In the short term, we're now moving upward. We are upward flowing in the shorter term. Some ideas on the bullish and bearish list. Like I said, I didn't add Conoco, but it could easily be on this list. And there's a few other energy stocks. Occidental Petroleum is something that I've traded on many occasions. Let's add a few names here. And Oxy kind of has a cup and handle type of pattern where it's in the bottom of the handle, a spot where I really like to buy. So I'm definitely interested. I haven't really stepped in there yet, but I was looking at them very closely today. Let's look at a few other names. So Berkshire Hathaway, nothing really exciting here other than this is just continues to be an outperformer both year to date. This is something that I like to see. Year to date, it's done a lot better than the stock market, and in the short term, it's doing better. So let's call it the last couple of weeks. Okay, shorter term, it's outperforming. Now, why is that important? Again, when you have stocks that are up year to date, they have more of a tendency to advance because there's less supply. There's fewer people that want to sell, and have to pay taxes. And so anything that's kind of outperformed the broader markets, this is one of the only things that's, up year to date. There's not a lot of things that are up. Energy stocks are up. Well, Berkshire Hathaway and some of these insurance stocks are up. Last week or 2 weeks ago, I guess, we didn't have the market roundups last week because of the holidays. 2 weeks ago, I highlighted Travelers. That's, again, in the energy space. So I think those are good plays into end of the year. I wanted to have a Chinese equity up here, not so much that you necessarily have to rush in to buy, but I thought it was instructive where there's all this bad news, and yet, like we said, it was up yesterday. FXI, which is the China ETF, was up about 1%. And then this stock was up 7% today. China ETF was up 5%. So big gap up. I don't know that it runs away from you, but notice we had been selling off in all these China-related names. We had started to recover. And more bad news hits. It gets priced in. The bad news really reached a new high yesterday, and yet these equities held up. That's a good sign of shaking off the bad news, and sure enough, we're starting to advance the other way. Up, 7% in the last 2 days. Not too bad. And then Prudential, again, this is in that insurance space, so you can kind of see the level that it has cleared back in here. And now we're kind of consolidating around that. I think, again, it should have a little bit more of a push to the upside. So I have a little bit of a focus on the energy, or pardon me, the insurance space, but I think I could add energy to my bullish wish list. Now on the bearish side, Amazon we highlighted again a couple of weeks ago. If you shorted there, you're up some already because it's gone down from 100. I still suspect we're going to go down and pierce that low again in the shorter term. If you're a little more bullish like I am for the next couple of weeks and think the markets might advance further, then you'd have to play this more, let's call it neutral to bearish. So maybe there's not a ton of downside, but there's probably not a whole lot of upside either. So I was kind of looking at this as it could be just stuck here. It could have another leg to the downside, but I would anticipate it underperforms. PayPal, terrible year. And why is it good when some of these stocks have had a bad year-to-date performance, which happens to be all of the stocks I'm highlighting on my bearish list? Year-to-date, it's bad. Lately, it's bad. Amazon, year-to-date, bad. Short-term, bad. The next one we'll look at, Square, year-to-date bad, short-term bad. When you have really bad performance and you're down 30 and 40 and 50%, the opposite is true. There is a lot of selling or supply that can come in. Now, some that want to sell have already sold and they've already taken their tax loss, but you can use that loss for tax purposes. Some will do that later in the year. Do they have to time it perfectly where it happens in December? No, but at the margins, there's going to be more supply. There's more reasons to sell stocks that have been down a lot year to date because of tax purposes, because you can lock in that loss, use it against your taxes, etc. So PayPal lagging on all those different levels, and probably, again, I'm going to call it neutral to bearish, because if the market goes up, this will probably stay more neutral. But nevertheless, I'm going to call it neutral to bearish. And Square, this thing's down a massive amount year to date. I think we're going to have further deterioration. Whether that happens in the short term, I'm not so sure. So I would almost rather play some of these with a little bit further expiration. Maybe you go out to January or February or something on your expiration and play these as downside trades. But nevertheless, I think there's underperformance, again, neutral to bearish on Square and PayPal and those payment processing companies. And by the way, those companies are being hurt by Apple. That's not a new story, but Apple Pay is really taking market share, and it's disrupting their business. And in addition, since we're talking about taxes as we get late in the year, it's worth noting that PayPal and Square and some of these payment processing, Venmo and so forth, if it's a large amount of money, you may have to start showing that on your taxes, where it came from and so on, because a lot of people are hiding payments through those services. So the IRS is cracking down on them. Again, not a brand new story by any means, but it just gives you kind of the sense of what the fundamentals are. I'm not losing sight of the fact that we're in a bear market overall, but I expect, this is my personal thesis, a push a little higher and slightly above the downtrend line. Give us that little fake move above, and that's a really good sell signal or selling opportunity up there in my mind. Powell speaks tomorrow. Core PCE, a big focus on inflation numbers. That comes out on Thursday. And then payrolls. The expectation is still that payrolls are coming in pretty solid. If there's any weakness in payrolls, that could be a good thing for markets in that maybe the Fed will ease up and so on. So sometimes good news is bad news and bad news is good news, and that might be the case with payrolls. Earnings, you've got Salesforce, Dollar General, Snowflake. Not a busy week for earnings. We've kind of wound down in earnings season, but a couple of names there that you might be trading or interested in. Hope you've enjoyed the market roundup today. Have a great rest of your day, and we'll see you next time. Goodbye, everyone.